Yeah, so the reason why people say, why do you do this? The reason I do this is because of this. I think this is like a community, right? People, there are a lot of people here. Who here has been to Crypto Mondays before, right? Yeah. Okay, so like, yeah, over half the room has been here. And my goal, together with Erez down here, one of our co-organizers from Head of Business Development from Blocks. We're just a loose group of people that throw things together. Monette is back here. Monette's helping us out as well. She's going to do a really cool event in December. And we have someone else you all may know, Irina Berkon. She's going to do our next event later this month. So it's just basically a volunteer thing to surface interesting people like who we have tonight. Super great bunch of people to share experiences. But for all of you to meet each other and interchange. We're not the speakers. We're just the conversation starters. Right? Our job here is to enable you to learn more, discover more. We have Reese Jones, one of the most well-known people in crypto, stealthily kind of coming. And, it's just a great community. So I'm really proud of what we've been doing. We've been doing this since January of 18, which it is dog years, right? It feels that way. But so we're going to keep on doing it. And what's really important is that we get, people who are passionate and who want to attend and want to give input. And if anyone ever wants to help out, feel free to talk to me or Monette or to Erez. But in any case, without further ado, the thing that we're talking about tonight is investment, right? That's right. Tokens or equity. This is going to be easier. Has anyone here not heard of Miko Matsumura?
Yeah,
there we go.
For sure.
Okay, so one person does know who Miko is. Miko is a legendary dude, and
you're a legendary dude.
and he's the founder of Evercoin, and he's a GP in a really interesting early stage fund called Gumi Cryptos. And so that'll be really interesting to dig in a little more. Nancy from Multiplied, right? You're the founder?
Yes.
CEO of that?
Yeah.
And Multiplied PR agency, marketing agency?
Yeah, Multiplied, we're a blockchain marketing and PR agency based here in San Francisco. We work with some exciting projects like Binance, Gods Unchained, Solana. Yeah, it's a fun ride.
Very cool. So that's, what I love about working with agency people is they see a lot of stuff. A lot of, I like to say agency people tend to be some of the best storytellers because they have maybe not always the best stories, because they're ups and downs on good stories, but they have a lot of, diverse stories. And the same thing I'm sure with LAToken, right? How many different companies have you all raised money for so far?
130 IEOs in the last 2 years.
Wow.
130?
130, 200 million collectively.
Wow. And is there a good, bad, and ugly
They're
list for
hiring for
you guys?
a COO, I believe, right?
Yeah.
Mm-hmm. That's good. Good growth.
Say it again. Mark?
What's that? So you guys probably have a good, a bad, and an ugly list, right, of your fundraising?
Projects, yeah. Of course, some projects go on the exchange expecting to raise millions of dollars and expect the exchange to do all the work while they don't do any promotion or any kind of vetting of the companies they work with. So of course, those kind of projects don't raise any funds, whereas ones that go on board and do an IEO exclusively that have already worked with compliance companies, marketing companies, PR firms, and that have exposure to all those user bases, those are the ones that actually raise funds and actually go on the exchange, have high volumes, and have a success long term.
Yeah, very cool. So why don't we start with you, Miko? You and I were talking about, your experience running an early stage fund these days, and I think there's been a shift, right? 2017, people just wanted tokens.
Yeah.
2018, maybe tokens equity. So I'd be interested to hear your perspective on kind of that journey, how that's changed, and kind of what people are looking for now. And some of my investor friends are like, I don't want tokens, I just want equity. So what's the lay of the land?
So Gumi Cryptos is a $30 million US venture fund, and we really, as a venture fund, we really focus on this sort of seed stage companies, right? So when we look at seed stage companies, the two things that we really care a lot about are teams, right? And then markets, right? And so these are really early companies. We know they're gonna pivot. We know that a lot of changes are gonna happen. There may even be kind of changes in the team or the lineup. There may be changes even in the market that they're playing in or the products. So we just know that these are very young companies that are gonna change a lot. So from our perspective, one of the key topics that arises is really governance, right? So to us, like when we look at governance, we really need to try to understand how it works, right? So from the perspective of an investor, so the definition, so this is a kind of a tricky mental game, but the definition of a professional investor, it automatically means you're investing someone else's money, right? Because if you're a professional, it means you're getting paid. And what are you getting paid from? You're getting paid from fees. Where are the fees coming from? The fees are coming from other people's money. So if you are in the position of allocating other people's money, what you need to think about is you need to think about things like, all right, well, how is this going to be governed? And how are we going to kind of like make sure that this thing operates in a good way? And so to me, what's happened in our world is that, you know, the thing that's actually complicated is even the existence of a token it complicates things for us, right? It complicates things for us because when you look at a company, okay, so it's like, okay, I have a Delaware corporation and you're gonna buy equity. Okay, I feel very comfortable with that. And the reason why I'm comfortable is that means I have legal rights, right? The idea of a tokens don't necessarily confer any legal rights unless you have some kind of a contract associated with those, right? Because they're of uncertain regulatory provenance, depending on your jurisdiction.
And a contract not to be confused with a smart contract.
There you go. So I guess the reason why I'm driving at all of this is that, like, if all of a sudden you have like a Singapore subsidiary that's issuing a token, right? Then the question becomes like, how do you deal with that? Is there a foundation now? And so now there's a foundation, and now it's a Panamanian foundation, and then like, so to me, like all of a sudden when I'm investing other people's money, I'm basically like, who's running the show? Where's the money going? And what's to prevent someone from pumping the token and dumping the equity? Or what's to prevent someone from pumping the equity and dumping the token, right? So like, that becomes like a crazy contraption, right? So for us, the only way, if there is a token, the only way we can kind of like sleep nicely at night is if we get the kind of incentives that the founders are getting as investors, and we have some measure of governance over what happens with those instruments in the future. So if both of those things are true, then we can kind of sleep at night. Otherwise, it's pretty tough. So that's our very conservative, curmudgeonly, old-fashioned perspective.
And are your LPs, limited partners in VC speak, are your LPs open to both? Are they, or do they tend to be crypto
So
savvy investors?
we're fortunate and lucky, which is that, you know, we raised our fund, you know, right around like Bitcoin 20,000, you know, and so our LP agreements basically allow us to do whatever we want, and we can basically own whatever we want. So really, it's not a question of the constraint model that we're under, it's more a question of what do we prefer, right? And at the moment, it's like, we prefer equity because it confers legal rights, and it also comes with governance structures, right? So, you know, we like things like board seats, and we think, for example, something like 2 insiders and a preferred shareholder board member, like that works.
Or maybe 1 insider, 1 independent, and 1 board shareholder.
Even better,
real other equity
even
funds.
more investor favorable, right? That structure is even more investor favorable. But like 2 insiders accounts for the case when the founder CEO like basically is like certifiably a lunatic, right? Because then the co-founder CTO is like, that person's a lunatic, like
But it doesn't account for collusion. I have to say,
Correct,
this is an
correct.
guy. We
Yes.
want the
Super helpful.
certifiable one to go as far to the edge like Steve did. And
Yeah.
Woz be like, I'm going to help him do that because that makes 1,000 millionaires.
Yes.
But then on the other side, when we bring in somebody from the outside who's the second board seat, which is
Yeah.
a Coca-Cola guy,
Yeah.
and Gil Emilio,
That's right.
and they
That's
mess
right.
with our money,
That's
we
right.
can get rid of them too.
That's right. That's right. That's right. So yeah, beautifully said. Beautifully
Perfect
said.
world.
So those are the issues. Those are the issues.
We know a world where real investors make real money.
So I'm making. So
Perfect
I'm
case
here.
for
I'm
it.
here to make the case for the traditional,
startups
which is
Yeah.
the equity side.
I'm curious though. Obviously with 2020 right around the corner, are you pursuing any hybrid deals? So there are deals circulating around where it's sort of you get your tokens and that maybe in a later date is converted into equity or vice versa. Are you guys interested in those?
Yeah. We do invest in deals where there is optionality, and we tend to not mind optionality as long as we have the optionality, right? So we can convert or not convert at our discretion, pro rata into tokens at said price, right?
Yeah.
So like we look at deals like that.
It's like a warrant deal.
And my
Yeah.
company's
Yeah.
gotten
Optionality is good.
no fewer than 3 calls in the last month of people slinging SAFs.
Yeah.
They're like, hey, here's a big deal. It's Telegram. It's about, it's an unlocked SAFT, or it's Hedera. It's
Yeah.
the SAFT 1 instead of
Yeah.
SAFT 2. So SAFs were all the rage, invented by a different firm, not this one, whose partner then magically disappeared.
Yes, yes.
No one's heard from since then.
Marco Santori.
So what is the state of SAFs from your perspective as an investor? Someone walks in and is like, to me, when I get the call, I feel like, hey, here's some insiders wanting to basically do a secondary market deal and sell right before the IPO. You're going to get a discount because they want liquidity now, but you have liquidation preferences. Is that analogous, or is the SAFT world totally different from, let's say, the early stage equity world that Silicon Valley VCs understand?
Yeah. So I think the original mindset of the SAFT was basically the idea was to kind of copy the safe note, but the reality is it doesn't actually do that. So it produces kind of more potential complications. So I think from my perspective, like, here's the funny part. The funny part is our LP agreements are super liberal, right? So we have like almost infinite freedom. So in an environment of almost infinite freedom, what you do is you constrain yourself. So for us, like I kind of have a policy where I'm like, I don't really like SAFs, so we don't sign those things. But we also have a policy that says we should break our own policies. So
The right company.
yeah, exactly.
Right.
That's it. Because VCs are pattern matching and entrepreneurs are pattern breaking, right? So to us, like having and holding fast to our policies is actually probably an error. So you hit the nail on the head, which is under the right circumstances.
Yeah, so I was just going to say, from a lawyer's perspective,
Yes.
if I'm
This is
representing
great.
an investor,
Yes.
I must say I really don't like SAS because they don't confer enough rights on the investor. I presume that's
What he said.
Yeah.
Yeah, exactly.
And unfortunately, I have the experience of having clients that, just get them and sign them, and then I have to subsequently tell them, you haven't got a lot of
10 minutes to sign, 10 months to unwind.
Yeah, you got a nice piece of paper there.
What are the
A
main
quick
rights
2-second
you want?
timeout. The sun's about to go away, so there's your quick end of sunset view. Thank you.
Nice.
Again, McDermott, this is just awesome. Thank you. Yeah, so I think that's really interesting. So Nancy, you mentioned something about incentivization. So I'm sure your firm takes or is offered to take part of your compensation in equity or equity in tokens.
Yeah.
How do you think about that? Someone comes in and is like, hey man, I want to pay you in like 100 million tokens, or I want to give you X% of the equity. How are you thinking about that now? And how do you think about that from a risk reward perspective?
Right, and I think things have definitely changed from, let's say, 2017, 2018, where you saw an influx of people and founders coming up to you and offering you equity or tokens, and things have definitely evolved because these companies at the same time need fiat for overhead, for staffing, for rent. And regardless, what I've noticed is, yes, there are a lot of SaaS, but there are a lot of companies operating in fiat. right? They have a small reserve of crypto, but they obviously have to have, overhead that they need to cover. And so in terms of, where I come from as an agency, we work with more, I would say early to later stage, so seed up until like Series B and C companies where they have money, they have revenue, and they have a proven model, or at least a proven user base where we can build that foundationally. But we are partnering with a lot of incubators, accelerators in terms of how do we help these companies who have, they're just getting started, how do we help them announce themselves to the world? And in that case, it's still going to be the same thing. Tokens are a huge gamble. Did accept them at one point. However, that was alt season, and now we're not in alt season. So it's just not a smart move. Regardless,
Yeah,
investor, I'm against it.
Yeah, I
Definitely.
retweeted a tweet this morning from Ron Newer. I don't know if you all know Ron, who's CNBC Africa. Apparently, it's the first crypto show ever. CNBC Africa does a crypto show, and Ron is almost more of a trade show guy than Miko. I mean, he's like everywhere.
Everyone.
And he's setting up his booth and he's shooting his show. And today he said, alt season is never going to come back. 99% of alts are just dead and are not coming back. And there's going to be a huge contraction of people working in crypto. It's just going to.
I don't think so though.
I'm just saying that. So like that's kind of the controversial, firebomb in the middle of the room. What do you guys think about that?
I kind of want to hear what he
Yeah.
thinks.
I
He's
think
pretty
of-
bullish.
I got a little gray. I've been around since there's this other alt currency called virtual currencies, and we made a shitload of money advising our boys over and went through all these different exits. Like the guys who built Serious Business, which was bought, and they built Zynga City and Farm Bill, and they IPO'd Siki Chinna's guys, and the guys over at other companies, OfferPal, they made a shitload of money in what is really an enhanced modular virtual currency. That's what altcoins and other coins do. The question is, did they position themselves where they secured and made a pure value proposition for people to use? I think the same thing with Ripple. Like, anybody who thinks Ripple's going to die doesn't realize that 90 or 70, 80% of a lot of these e-commerce sites still use it.
And their partnerships. Right?
Yeah, and they're physically co-located. If you're going to do training, once we figure out how to do microsecond transaction stuff, real high frequency level technology in blockchain.
How is that related to what you were going to comment on earlier?
Because when you're actually buying and selling a commoditized thing that allows them the right to buy a product and service and do it in microseconds,
To the tweet,
they're going to trade faster. So if you have that currency that's tied to a data center next to the bank in Atlanta where 70% of the e-commerce in the United States goes through, you're always going to have a value.
So, I think Len was asking,
Yeah.
like, so you think you're
season
calling
is-
BS on what
Yeah,
Ron
what's
says?
your
You
I'm
think-
saying-
opinion of it.
the ones that have value, an intrinsic value. Ripple has an intrinsic value.
So he's saying
Go Abras
99%. So how many exchange traded tokens are there now? Like 3,000?
Yeah.
Something like that.
So-
Just about 3,000.
It's out
So
there,
a lot of these companies, his statement that 99% of these companies are going to vanish is probably true, and Ripple is that 1%. Okay, maybe companies
Go Abra.
that have technology that a lot of companies use and is not going away. That's that 1%. But the fact of the matter is, a lot of these companies are now raising funds, and they need overhead to fund whatever they're doing, whether it's events, exposure, marketing, PR, development.
Right.
They need that. Without overhead, they're gonna die.
Right, but not 99% of people leave though, because the winners are going to hire everybody else because they're going to scale. Because of the 8 billion people in the world, only 4 billion have phones. That's why people like Akon's. People think Akon's doing power systems. No, I know personally he's not. If he did that, he only took $1 billion from China. He's doing the other $8 billion for free phones with free cell towers with their own solar power, so they can do an actual virtual currency for the African Union. And then he's got China tied in. Same thing with iCoin, the gal who did.
Virtual currencies.
Yeah, Acoin, and then there's iCoin, AI. She's at Citibank, Carlos Slim's mobile payment company.
Yeah.
They've got South America and Europe tied in. So there's still a lot of headroom where great technologies and great intrinsic values and get 4 billion new customers in the next 10 years.
But I object to the phrase intrinsic value. And I think it's a topic of vast debate.
Yeah.
No.
right?
I mean for virtual currency.
But it's really value that arises through
I agree.
usefulness, right?
Yeah, no, I agree.
You could argue that Ripple's network doesn't have intrinsic value yet because even though they have all these like huge partnerships, you can actually talk to the people at those banks. No one uses it yet because the network is still like it's still being formed. So what is the value of that? Yeah, and I think like you can't talk about like what's going on blockchain. This is still really early days. Like even the best engineers in the blockchain space aren't in agreement about what the best implementation of it is.
But to
So
me,
that's a really
the
good
thing
point.
the thing that makes this
There's no
venture
standards essentially.
We're in like the earliest days of blockchain. Even though the technology is super valuable, and has a lot of like room to grow, there is no one knows like how to do it like the most secure or how to do it where you have the lowest latency and like stuff like that.
Yeah.
So
I think a lot of the problem
But you
with
know why, right?
When here.
well, it's new.
It depends on what problems you're actually trying to solve.
You gotta-
That's why. That's why you get into that challenge.
But we're 10 years
Okay,
in.
guys.
Yeah.
So we're gonna like
So I agree.
Kinda
I agree with
stay on
these are all
track
really
here.
good points
So-
based on.
So one of the
Let
things
them
that
speak now.
that we're seeing is everyone's talking about utility. So how are we going to have what does utility mean? So for example, I'm doing a project now with Anheuser-Busch, and we're doing a project around supply chain, and there are probably 10 different vendors have come out of the woodwork. Hey, we do more transactions per second than these guys. Hey, we're better than that, and our thing is immutable and blah 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 and all this sort of thing. But there's one project that's tied at the hip with IBM that's signed up like 10 really big brands. So it's not about how many transactions per second matter. It's like how many different what's the network effect going to be of that network? And people are believing that network effect is going to be a cube or whatever of the number of people brought into the network by these big companies. So with that context, how do you all think about who's going to be a winner, who's going to be a loser, and what you invest money, effort, time, marketing? How do you guys?
Yes,
think
I
about
think what you were talking about with respect to network effects is essentially sort of the Metcalfe's law, which is the square of the number of connected nodes. And so one area where we see that's going to for sure take place is in messenger-based payments. Right, so if you look at, October 31st, we're going to see the launch of Telegram, Ton. That would be really interesting, right? Other ones that are super interesting on our horizon, like, my fund, Gumi Cryptos, is actually a block producer for the launch of the Clayton network, which is 220 million registered users of Kakao Messenger. We're also partnering with Line and Unblock Ventures in Hong Kong. That's 500 million registered users. So Line is the Japan dominant messenger, also going full crypto. Both those Korean and Japanese messengers are launching before the end of the year. And then obviously we have two much bigger projects, whose launch date is less certain, right? Which is the People's Bank of China, who has Alipay and WeChat as their launch partners. So that will be 900 million daily active users, not just of a messenger, but of a payment network. And then, of course, Libra. And Libra is 2.3 billion monthly actives using WeChat and Facebook Messenger. So launch date uncertain. So, but if you add all those together, that's like a lot of users. So I guess what I would say is, we think that's one of the reasons why we're really interested in mobile gaming solutions, because we think that platform, users, payment, games. I think that's
Right.
that'll hit in the time frame that we're looking at.
I think Nancy was also talking about this in terms of like ease of use, right?
Yeah.
I'm doing some work with some friends over at a protocol called Harmony, and they're trying to do gaming on that. And I've been saying to them, I'm like, it doesn't really matter the TPS sort of thing. It's like, how do you bake that in so no one even knows about it? How do you make the app work without calling it a wallet, right? E-commerce, I think, kind of still hamstrung by the metaphor of the shopping cart. right? Like that's a terrible metaphor, right?
Yeah.
You know, or advertising, online advertising is still suffering the pain of CPM, you know, cost per
Cookies.
thousand, 100-year-old model based on, you know, paper advertising.
Yep.
So when I think a lot of the questions I keep hearing from people isn't just, oh, should I use this or that protocol? It's like, why should I use blockchain instead of this old database and it works fine? Why should I go to a new technology?
Right.
So-
Yeah, and that speaks a lot to enterprise, right? A lot of these enterprises are looking at blockchain. They're like, this is exciting, but what use case is it? You know, we have companies, enterprise companies using blockchain, but it really is just a glorified database, right? And I think it always comes down to use case. Blockchain is not for everyone, and it's not going to be for everyone, and that's okay. But going back to your point in terms of onboarding, like that's huge. I think right now this space is heavily invested and hyped on things like decentralized finance, you know, gaming, NFTs. That's all great. But what we're facing is that a lot of these people that are crypto curious, they land on a website and they're like, how do I set up a MetaMask? Cue, you know, 20 steps later. Okay, after the MetaMask, what do we do then? You know what I mean? And all of these steps are just barriers to adoption. And what it's interesting from an agency because we look at these problems and we're always trying to help companies overcome them. But at the end of the day, like it's hard for us to come in because it's something that needs to be built. And so, you know, I do see a lot of value and investment going into more crypto to fiat on-ramps, key management systems. Those are all really important to me personally because at the end of the day, this is so overused, but my mom will, like, even if I, like, sort of spoon feed her Coinbase, she'll never be able to buy it, let alone manage it, right? So custodianship is right behind it, honestly, is how I see it, but
I gotta say
hopefully-
this too, if you don't mind. This
Yeah.
is super important.
Yeah.
You just said something critical. As an ex-iTunes guy,
Oh, okay.
it's kind of important that we get the payment on-ramp right.
Yes.
And I think it's critical to be honest about, there's a reason PayPal left Libra.
Yes. Well,
And there's
it's
another
conflicting,
reason,
yeah.
there's another elephant in the room called Apple Pay, and I'm actually not bullish on them, but I would say to you, because we're in this space on the CPM, CPA side with Overweb, and these guys are Zodica, they're the guys who process all the risky payments for this little bank called Wells Fargo and 6 others. They got approved to do all that. For this other frontier technology, all the risky ones started a green rush for Western Union, the only one. So the key for this is, if you don't build a automagic one button click experience, you're dead. You're part of the 99 that get ate up, and then your people get hired or acquired.
Yeah.
It doesn't
Although-
pass the mom's test. the
Exactly.
solution.
Yeah,
good.
mom's test. Yeah.
Keep it simple.
A good
Which is
analogy
harder.
would be
It's much
like
harder than-
Chase, like for example,
naturally
Chase,
overcomplicate
QuickPay,
things.
Zelly, right? You gotta log in, you gotta do like 5 steps or whatever, as opposed to Apple Pay, where you can have an iPhone, text a phone number that's another iPhone, send them $1,000. I mean, I literally just got a text message today. They took 2 seconds maybe
Yeah.
to send me $2,500.
Yeah.
So when integration becomes that seamless, where people don't even know it's a blockchain, that's when we're going to see some serious adoption.
And I think that's the magic phrase, though.
It doesn't have to be one. Hold on.
All of this is that, the foundation of blockchain is decentralized. And so when you're talking about any of these solutions, you're adding centralized types of solutions. Because if you don't want to be able to manage your own wallet, I think it's really important to simplify the whole wallet. But when we want to have a way to handle, you've got your mom or whatever who wants to invest in Coinbase, or she gets on Gemini and she uses the Gemini exchange, and you're using their wallet, right?
Yeah.
You set it up, you put your money in their wallet, you're using their wallet, you're trusting them. And you've got a fair amount of trust in that exchange, any
Right.
exchange, right? But if you want to have true decentralization and you want to have the autonomy and you want to have also, the privacy aspect of it, then you need to be able to manage your own wallet.
Right.
And that's the conflict, that's the rub.
Yes, attention.
And so we've got all of these solutions, you've got security tokens, you've got all the financial institutions who I talk to all the time, who are trying to set up these global types of solutions to replace SWIFT and everything else. But you can use blockchain, you can use Ripple as your infrastructure or whatever, but when it comes to the end user, that's where it has to be, made bulletproof, simple, but secure, right? Because on any of these little devices that are this big, I could be having $100 or $100 million, right? It's a number. And that's where that piece is complex, because the minute somebody hacks into my wallet, it's over. So you have to be thinking about, what is my personal security solution? How am I managing it?
Definitely custodianship, yeah.
Anyway, sorry.
That was
I
good.
think a user, because any basic user and the actual company, right, on the other hand, right? So the user really demands simplicity, right? Like exactly what somebody said, that we need one button click and made it easy. Nobody cares about blockchain. Nobody cares about how it's
What's
built,
behind
what's
the scenes.
behind it. What really user cares about is like how simple it is for you, like for my own use.
But I think one
What
thing.
the companies should care about is the security, privacy, all the protection, blah 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 blah. Other like million things that needs to be taken into account.
But I think the thing that's interesting about all these problems is that, like, in some ways it means that, like, a lot of the problems that, like, I have are like first world problems, right? And so in my world, like, it's like, oh, how do I get more interest on my crypto? Like, these are all like Abraham Maslow up here problems, right? Like, the thing that's really interesting about the potential adoption pattern becomes when you have countries where there are fundamental existential problems with both the banking and the government infrastructure. So I think in those cases, like, self-sovereignty becomes actually an existential problem, right? And so that's when you will have people who will, like, deliberately maintain their custody, and to me, like, this stuff isn't that hard. Like, what I mean, this stuff, like, I think, I want to refute a statement made earlier, which is that we're still in the early days. Very common thing to say, but the stuff that people are balking about, honestly, is not that hard. And I can tell you that, like, as a VC, I see a lot of deal flow, I see a lot of solutions, and I see a lot of really good solutions. So, like, when I see the stuff that's happening and that people are building, I just think to myself, this stuff is going to happen. Like, it's going to happen pretty fast.
Well, like a year ago, Miko, everyone was like, oh, I only want protocol layer stuff. I only want, like, foundational stuff. I don't want dApps. It's too early for dApps. Where are we in that timeline? Is there a dApp that you're like, wow, this is great? And
yeah, so I'm not a dApp guy. Like, I don't believe in dApps. I don't think dApps are a thing. So
you're an infrastructure guy.
No. I literally don't think dApps are a thing. In other words, what I mean by that is I think that a smart contract is a vending machine. So, and I'm with Nick Szabo. So, like, if I think a smart contract is a vending machine, then the only dApps that make sense are vending machines. So if that's what I think, then there's a very limited number of dApps that could have any meaning. Like, that's basically my argument.
So
people think dApps, they think apps, and then they think, oh, App Store, and then they think, oh, infinite number of fun things to play with. But it's I don't think like that.
But couldn't you make an argument that something like Libra, in fact, is a dApp? Because it's not a protocol layer. I mean, it's built on top of something. And it's not all governed by smart contracts. It's kind of like
I don't see it so much that way. I mean, I think
that's a question for you. How do you address that?
Is Libra an app?
or a dApp.
A DApp? No.
Yeah, I don't think so.
I don't think so. Yeah.
I think what you said something really interesting earlier is, like, you go to enterprises and it's like, what is the value prop of blockchain right now? And I mean, I started and run a company that is a payment-based company, and we actually have to get end users and merchants, and we're dealing with payments in, like, the spaces that no one else wants to touch. And so like all the things we're talking about, I have the data looking at this. Blockchain has nothing to do with this conversation in some ways. And for enterprises, it's there is, like, I haven't heard, like, we have blockchain engineers who were like, there's no reason to implement this right now because
Yeah.
you know, I mean, unless you want something like, you know, splashy and helped raise money for a little while, but you know, I
Needs
wouldn't
to
want
move
to
the
take
needle.
those investors
Yeah.
anyway, because the investors that were like, oh, it's blockchain's hot, let me dump a ton of money, are the ones that are going to get burned. And you know,
Right.
that's why I think, like, you know, we really, like, going back to like, well, what is Libra? Libra is just an extension of Facebook's network. It's just Facebook plus, right? It's
Until you ask.
That's it. Go ahead. I was going to say, honestly, in full disclosure, one of my investors in early companies had a payments to Facebook. I'm a personal Facebook and real world friend with Mark and his sister who kept him on track for a while. Facebook's locking up their block, and PayPal didn't go along for the ride. And when Facebook got in trouble with Europe, that's why they were out, because they need to do transfer.
But argue Facebook gets in trouble
So-
anywhere
so-
in the world.
Yeah.
So Jan, I just want to ask you from an exchange perspective, you're like a top 10 exchange. You've helped a lot of companies raise by issuing tokens. Have you guys done other stuff besides this token issuance, or is that just all token issuance?
So the main thing we've done is IEOs and exchange listings. We have security tokens on the exchange now, but of course that's a very small market right now. Very small amount of accredited investors and security tokens on the exchange relative to utility tokens, the number of IEOs, and the liquidity in that market.
Yeah. So double clicking on IEOs now, a cynic will be like, oh, it's just an IPO, but instead of and it's just like an ICO, but instead of a bunch of little investors, now I have all my eggs in the basket of Binance or of this exchange or that exchange, and these guys just want to basically insider trade with their best clients. Is an IEO, looking back now on the almost year of doing it, has that been a good thing for crypto? Is it just the same sort of thing in different clothing? What's your perspective on that now?
So IEO in itself, I think it's a very good thing. Whereas the exchange sells tokens to their user base. ICO, they were, these projects were trying to do the development and the marketing, and of course, because they want the majority of the exposure, they're only focused on the marketing to sell their tokens. Development is not happening. Whereas they go and have the exchange sell the tokens, they can go and focus on development. The exchange can go and focus on the marketing, sell tokens to their user base, get the exposure. So the marketing side is being done by the exchange to sell the tokens, get the exposure, and the project itself can go and focus on development. So now we have these projects actually getting something done and raising funds with development happening.
And so what's the average size of an IEO these days? How long does it take? What sort of projects come and do an IEO?
A lot of the projects doing an IEO are very early stage projects. Maybe they want to raise a couple of $1 million total. They want to go on the exchange, usually exclusively, especially because they want to target a specific user base. Right now, the main user base is US, actually up by 300% in the last month or so, which is pretty crazy. Asia has been super hot, but in the last month, our US user base is up by 300%. But we've seen, as you guys know, the U.S. market has kind of slowed down, maybe because of regulations, scared a lot of projects off. Exactly. Go ahead.
It's great for the dick.
Is that indicative of Binance pulling out of the U.S. and people are used to using Binance main instead of Binance U.S. that you're onboarding all these new clients?
It could be a reason. So anybody in the U.S. can go on the exchange, sign up, and trade tokens up to 10K per day. So Binance pulling out, maybe that user base is coming to LAToken. Made it super easy.
Did you have to get an MSB license to do that?
For what?
For being
Trading
an exchange?
utility tokens?
Just being an exchange. A lot of the exchanges now have made the determination that they need to get their money service businesses license to be able to do what they do, and especially with the regulations that are like either /here and on the horizon.
I don't believe so. Our entity is in Malta, Singapore, and Cayman.
So I was going to ask, geographically, Asia, U.S., Europe, Latin America, what are those geographies looking like for exchange activity?
U.S. and Asia, top two right now. Everybody else, South America, Europe, kind of slow. But U.S. literally is number one in the past month or so, and Asia's just been super hot with the meetups, with the projects. actually raising funds, listing on the exchange, showing good volume, and it seems like US is soon to follow.
So Miko, there's been a bit of a paradox I've heard from a lot of projects I've worked with that, yeah, we want to go get money from China because there's a lot of money, but once it's on the exchange, they're like running for the exits and dumping the token. So that ends up hurting the project probably more than if they hadn't raised the money. What is your perspective on the different markets as it relates to investors? And is it safe to say that China isn't really an investor market, they're just a gambler market?
Well, yeah, I mean, I would say this, right? It's very much on a case basis. So we have investment partners, co-investors that are China and Asia based, as you might expect. So it really depends. It depends on the psychology of it. I would say, as a general pattern, like the fastest money in the business has been in China traditionally. So you do see like FBG style investment where it moves really fast. It moves faster than you. Like that's the way it is.
So is there a China analogy to Andreessen that's like we're just holding for 10 years, or does that just not exist right now in China in the crypto world?
It does exist. I mean, there are definitely good funds. Yeah, there are funds that like I think invest out of there that have kind of durability, but it's just your mileage will vary.
Different.
Yeah, I think the
So
style
how
of it is
so?
faster.
How so, Nancy? What do you mean by
Yeah,
that?
I mean, I can only speak about Chinese people, but highly speculative, highly relational people, right? Back in 2017, 2018, if you invested in an ICO and I'm your friend and you said you just invested, I would go all in too. And so if we look at that fundamentally, whereas we're in the US, we're very rational people. We want to do our research. We want to know the team. We want to read the white paper, right? Maybe not all of us, but it's just culturally, it's so different, not just in investing, but also language, also marketing and advertising. It's radically two different things, and a lot of blockchain companies struggle to bridge the gap and vice versa. So it's very, very different. But once you get it, you get it.
So let me ask all three of you quickly, what advice would you give for a crypto investor today? Is this a trading market? Is it a hodl market? Is it something else? From your wearing your hat as investors, from your own perspective, how would you think about that?
Yeah, so my feeling right now is, I do believe that there remains consolidation. I think the retail market should be, conservative in their behavior, because I think we said it well, which is that like, if 90% of IEOs die, it means that the exchange that's sponsoring those is actually a venture class diligence agency, right? In other words, like, 90% of my portfolio should die, right? And I'll be a great fund manager if that happens, right? As a VC, right? So if you look at that, then, and the thing that I've seen historically that I was hopeful about IEO because I really felt like, well, there's going to be like 10 or 20 exchanges that will do IEOs, and then like the winners that are going to be the ones that are really good at diligence, and they're going to enrich their user base and they'll start taking off. And like that may happen, like, LAToken could be that style of exchange. But I think the incentive structures haven't worked that way historically so far. So far, a lot of it has been that it's been about acquisition of customers and listings, and so because of that, the diligence has been like sort of less prioritized. So to me, like performance, I think it's sort of a time to be relatively consolidated. I'm doing consolidation on my personal portfolio, so mostly pulling back into the top 10. But that's just my move. So others, your mileage may vary. Not investment advice.
Yeah, I'm pretty. I'm not a very speculative person, so naturally I've just been holding since 2013. So I will always hold. That's it.
For me, my strategy is if 99% of tokens are going to die, I'm going to see in this period kind of a consolidation. I'm going to see what projects are dying off and what projects are sticking around. The ones that are sticking around, those are going to be the ones to hodl. Simple strategy for myself.
Hey, quick question for that. So, and this is for either one of you guys, when you're actually evaluating these token models, whether that's on exchange, investing, whatever, what do you do for the framework, right? Are you looking like Burnham equilibrium? Are you looking for store value, a medium of exchange? Like what is the model? Like what is the flywheel here that you look for?
Well, I mean, I think that there are certain fundamental principles that always apply. And I think one of the things that always applies is we need to understand the money supply, right? So it's, what has been invented is essentially digital scarcity. So like the value actually has to flow from like utility as well as scarcity, right? So if there's no scarcity, then we can't do business. So I think that's the bottom line.
That's great. Yeah.
So models like token burning that actually produce deflationary pressure and increase scarcity, that can be favorable, right? So those are the types
But
of
also
things.
probably security as well.
Makes sense.
Yeah.
So one final question, and we'll
For
open
sure.
up to some questions because it's 7:20 and I want us to be wrapped here by 7:30 if anyone has to go or drink the rest of the wine or whatever it may be. And thank you for McDermott on having the people on overtime to do this for us. What are you excited about and where do you see the market? I mean, I guess in June I was like, what the hell is happening to Bitcoin? It's like taking off again and now it's half of where it was in June almost. Been reading a lot of people being like, you know what, we're all, everyone's becoming Bitcoin maximalists and ETH is dead and the game is all Bitcoin. There's so much stuff and you ingest so much content and opinion, it's really hard to sometimes keep your own thoughts straight as someone who's an observer but also in the market. So curious about...
Yeah. So Mark, I think you said something that kind of set me going down this track, which is that people think that financial services is a vertical, and then they think payment is an application. And it's like, payment is a platform, right? So because payment is so horizontal, what it means is that when it arrives, when enterprise payment comes with like regulated bank supplied US dollar pegged assets, that's when the enterprise will light up, right? And when retail payments come with messengers, that's when like gaming and e-commerce and everything else is going to light up, right? So payment is the thing. So that's what I'm excited about. I'm not excited about payments per se because I'm not a payments person. And not only that, but there's almost nothing I can invest in as a VC because payments are done. Like Facebook is doing payments. Like the people doing payments have it locked. Like they don't need my money. But what I'm excited about is once the payments hit, it's going to be like everything's going to light up.
So
on both sides.
Quick
retail
follow-up
and
to that.
enterprise.
I totally agree with you on payments. My one hurdle that I kind of can't get over is the volatility. And then let's kind of jerry rig it and do backflips into a stable coin to like have some sort of stability when we have the world's greatest stable coin, still the US dollar. I mean, I hate to say it, but the dollar is still.
But for enterprise payment, that's what it's going to be.
Yeah,
It's going to be dollars.
Yeah. So, but how many stablecoin projects are there? And everyone's trying to get you to get onto a stablecoin. Are stablecoins a good idea? I mean, I think theoretically...
Stability doesn't exist, Stability is a feature, but it's not actually the reason to have a coin. The idea that there's a thing called a stablecoin is actually nonsensical. So to me, stability is a feature of a coin.
Tweet that, by the way.
And the idea of things being stable, there are no stable coins. There are only pegged coins.
What about people who are trying to peg it to gold? What would you say?
Gold moves too.
Yeah.
The
I
value of
would
gold
say
is constantly
that if someone is trying to sell me a crypto backed by
How
gold,
would you back?
I would run away because it's likely to be
There's
a
another
scam.
project that's pegging to silver.
Well, it's like something that hasn't been mentioned. Tether is actually like one of the most used cryptocurrencies overall, and Tether's price still fluctuates, right?
That's right.
That's like basically like the one stable coin that is like backed all this. But I actually think Miko said something so important earlier. Like the crypto use case, look at what's happened in Venezuela. People use Bitcoin now. There is your use case. Like you said, like we can debate about what the best implementation is,
Yeah,
but
but
the
inflation is still there.
yeah, and that's
Just
his
because
point too,
people
is that
use
it's
it
not going to
doesn't
go
mean-
away. It doesn't. Stability is a feature, right? It's not going to go away. But when the alternative option is 10 times less stable, that's when crypto starts becoming a good method for payment.
Yeah.
So
Not the
before then,
alternative
there's
for
better
Venezuela.
options.
Right, the stability is
Only way.
relative.
Yeah.
So
Right.
Nancy,
Just
you were
saying.
going to say, what are you thinking about? What are you looking at? What do you see? coming down the road the next year that you find exciting, intriguing, interesting?
Right. I think, honestly, DeFi is a little overplayed because you're working within a pool within another pool of people understanding finance and understanding how to interact with these platforms. But I think I'm tooting my own horn in terms of onboarding. That is like my utmost priority, because at the end of the day, when you're marketing these companies, when you're talking to everyday people about blockchain or all these awesome companies doing cool things, the first thing is, great, this all sounds great, how do I sign up? And it's like, oh, well, you got to like do all these things. You'll never understand. So that's my priority right now. And so any company solving that, I definitely believe in.
What's a good example of a company doing that successfully?
Yeah, so I think there's lots of customer key management, like Portis, Smartmatic. SquareLink is one of them. There are a lot of companies coming in and doing a lot of, instead of having public and private keys, you have an email and a password, and you can recover them, right? Or you have, let's say, blockchain domains, where instead of, a 36-character address, you're sending it to Nancy.whatever, .eth, .zil, whatever. Those are really interesting companies, because at the end of the day, like, you want it to become like Venmo, not, hopefully I copy and paste this correctly, right?
Yeah. I'm excited to kind of wake up and see all these companies actually integrated into the back end where nobody knows they're using blockchain and crypto, and they're like, something like Venmo or Apple Pay. That's going to be exciting to see, because I know a lot of people have been here since, like 2013, 14, 15, 16. And it's going to be amazing to see coming from the beginning to where it actually came in, 5 or 6 years,
Oh, and just a side note, any crypto companies building something, you can integrate Apple Pay. They just have really stringent guidelines on how you do it. So just to know. Lots of companies working on it right now.
Well, Nancy, Jan, Miko, big hand for our panelists. And Melissa, we're here. We have until 8. Is that right? Or
like 7:45.
7:45. Okay.
Yeah.
So
be quick.
Drink fast, have some wine. Thank you very much. See you next time.
Great.
Awesome. Thank you.
Hey.
Sorry, my hands are freezing. Yeah?
I'm gonna learn reading alpha in tomorrow. Yes. Cannabis. Yeah, it's red hot. We do.